Hello and welcome. While the stock market spotlight often shines on tech giants and flashy startups, a silent revolution is happening beneath our feet. Literally, India is undergoing a massive transformation in its physical landscape, driven by the government's push for modernization. But what if I told you the best way to play this boom isn't through the contractors building the roads, but through the companies providing the essential components they use every day? Today, we are deep diving into the hidden infrastructure stock that is the backbone of India's construction, water, and housing sectors. This isn't just a story about pipes and fittings. It's a story about the plumbing of a nation aiming for a $5 trillion economy. We will explore how one specific player is positioned to capture a market growing at an exponential rate. To understand the potential, we must look at the National Infrastructure Pipeline, or NIP. The Indian government has earmarked a staggering $1.4 trillion for infrastructure projects between 2019 and 2025. This isn't just a number on a spreadsheet. It represents thousands of new bridges, millions of new homes, and a nationwide overhaul of water distribution systems. Furthermore, the Gati Shakti Master Plan is streamlining these projects, ensuring that logistics and supply chains are optimized. For an investor, this represents a multi-decade tailwind. When the government spends on roads, railways, and urban development, the demand for high-quality building materials, especially PVC and CPVC piping, skyrockets. We are looking at a sectoral shift that favors organized players with national reach and robust manufacturing capabilities. India is currently seeing a massive surge in real estate, particularly in Tier 2 and Tier 3 cities. The Pradhan Mantri Awas Yojana aims to provide housing for all, and the rapid pace of urbanization means millions are moving into formal housing every year. Each new apartment complex requires kilometers of internal plumbing and external drainage systems. This isn't just about volume, it's about quality. Modern homeowners and developers are shifting from traditional metal pipes to polymer-based solutions because they are corrosion-resistant and easier to install. Our featured stock is a leader in this high-margin building material segment, catering to the premium housing market, which has seen a 25% increase in demand over the last fiscal year. The residential sector is no longer just about shelter, it's about sophisticated infrastructure. Perhaps the biggest driver for our hidden gem is the Jal Jeevan mission. The goal is simple but ambitious, providing functional household tap connections to every rural home by 2024. As of now, the government has reached over 60% of households, but millions more remain. This requires a gargantuan amount of HDPE and PVC pipes to transport water from sources to remote villages. The budgetary allocation for this mission has consistently seen double-digit growth. Companies that can provide diverse piping solutions, ranging from large-diameter water mains to small household connections, are the primary beneficiaries. Our featured company has strategically positioned its manufacturing plants near these high-demand rural hubs, reducing freight costs and maximizing margins in a way that smaller, unorganized competitors simply cannot match. Let's name the player. Prince Pipes and Fittings. With over 30 years of experience, they have evolved from a small family business into one of India's top 5 piping companies. What sets them apart is their incredibly diverse product portfolio, over 7,200 SKUs. They aren't just selling pipes, they are selling systems for plumbing, sewage, and agriculture. They have 7 state-of-the-art manufacturing plants and a distribution network of over 1,500 channel partners. Their partnership with global giant Lubrizol for FlowGuard Plus CPVC gives them a massive edge in the premium plumbing segment. By focusing on branding and influencer engagement, specifically targeting plumbers and contractors, they have built a brand that is synonymous with trust and durability in a fragmented market. Numbers don't lie. Prince Pipes has demonstrated a consistent ability to grow its top and bottom lines. Over the last 5 years, they have maintained a healthy revenue CAGR of approximately 15%. More importantly, their return on equity, ROE, and return on capital employed, ROCE, have frequently hovered in the 15 to 20% range, indicating efficient management of capital. Despite the volatility in raw material prices, specifically PVC resin, which is linked to global crude oil, the company has managed to maintain stable EBITDA margins through proactive inventory management and a shift toward value-added products. Their debt-to-equity ratio remains low, giving them the dry powder needed to expand capacity as the infrastructure boom accelerates. For the savvy investor, these financial health markers are green flags. No investment is without risk. For Prince pipes, the primary challenge lies in raw material price volatility. Since PVC is a derivative of crude oil, global supply chain disruptions can compress margins. Furthermore, the competition is fierce, with giants like Astral and Ashervad also vying for market share. However, the unorganized to organized shift is the real story here. Smaller local manufacturers are struggling with compliance and rising costs, allowing bigger players like Prince to gobble up market share. While interest rate hikes might temporarily slow down real estate, the long-term structural demand for water infrastructure remains inelastic. Investors should monitor the company's ability to pass on cost increases to consumers and their progress in the industrial and infrastructure piping segments. In conclusion, Prince Pipes and Fittings represents a classic picks and shovels play on India's development. Whether it's a luxury high-rise in Mumbai or a small farm in Uttar Pradesh, the need for efficient water transport and drainage is universal. By investing in the hidden infrastructure that makes modern life possible, you are aligning your portfolio with the very growth of the nation. As professionals and investors, the key is to look beyond the headlines and find companies with solid fundamentals, a clear competitive advantage, and a front-row seat to government-led transformations. Keep an eye on this space, do your due diligence, and remember, while the buildings reach for the sky, the real value is often found in the pipes that keep them running.